The Tax Lady with Esther Gulyas and E.G. Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulyas.
Hey guys, this is the Tax Lady, and this is our hour to talk taxes. So like, if you're getting those W-2s, your unemployment, your 1099-Rs, your Social Security statements, and you need, and any of those weird things that happen during the year, this is your time to get some free advice. Call Auntie Esther at 803-0930, 803-0930, star 930 on a cell phone. And we're on News Radio 930 AM. And we got Stevie Jacobson, my assistant district manager here. We pulled him out of the office. Hey, Steve.
I can't believe it's daylight out here. I haven't seen it in so long.
And it's like a 300% increase in heat.
I know,
We went from like 0 to 30.
I can't believe the fact that we're in double digits again. And by midweek, they're saying in like 49, 50, somewhere in there.
Oh, my God, it's been so cold. Every time a client opens the door at the office, you can like I can feel it. I'm way inside, and I can feel it inside my office.
You almost get sucked out because it's sucking the heat out so quickly.
Oh, my gosh, it's so cold. But anyway, this is our time to talk taxes. And just to let you guys know, all of our offices are open 9 to 9, Monday through Friday, 9 to 5 on Saturday. You can get all the information off of our website at egtax.com. It'll give you all of our offices, our supervisors' names, their locations, and I just think we do a great job. And I certainly can tell you that if you need any help, Auntie Esther's here, Stevie's here, Chris is there, Tiffany, our entire staff of over 150 people are there to help you.
And I can tell you, if you come in and have us take care of you, if you've gone to one of those other bigger firms before, you're going to come to us and you're going to save, on average, we save people almost $100 every time they come in.
You mean in fees?
In fees, right.
Plus we fix their returns.
And we do that too.
Hello. Anyway, you know what we want? We kind of like to have a topic. And that doesn't mean that you can't talk about whatever you want to, because we love to hear what you have to say, because people come in my office and say, I love to hear what these people have to say. I would have never thought about those things. So 803-0930, 803-0930, star 930 on the cell phone. But we thought we'd talk about Social Security, because people don't know, is it taxable? Why is it taxable? When does it get taxable? How can I make it not taxable? And that's what we thought we'd talk about. First of all, when is Social Security taxable, Stevie?
Well, the formula goes by half your Social Security plus your other income and tax-exempt income. And when you add all that together, if it adds over to $25,000 or over if you're single, or over $32,000 if you're married, filing joint,
then part of it's taxable.
Right, not the whole thing.
Only the excess over the $25,000 and $32,000 floor, unless you are very well endowed financially, and then it can be 85% taxable. So what happens is, you guys during the year don't know that maybe you aren't paying income taxes and you went gambling.
Yep.
And gambling is like shooting yourself in the foot.
Especially because of the fact that a lot of times you hear from your friends, oh, don't worry, your losses, they're going to offset it. Well, first of all, many senior citizens don't itemize. So
That's exactly right.
So it's not going to be a true wash. And then the other thing is, it's going to add income to your Social Security, which is going to make your Social Security more taxable. Right. And you're going to get almost a double whammy in taxes.
That's right. Like, let me give you an example. Let's say you got a $10,000 pension and you got $20,000 in Social Security. All right, so you really wouldn't pay taxes, right? Because at that level, it's no problem. Then you go to the casino and you got the win-loss statement says you won $20,000, which on line 21 is taxable. Now, you may be able to deduct it as an itemized deduction, but what happens is your 20 and half your your 10,000 and half your Social Security, which is 10, gets added to your gambling, and that puts you over the 32. So you end up paying $4,000 extra taxable because of the Social Security.
That's right.
So I mean, going to the casino is not a good thing for seniors. You got to be really careful. So we're gonna talk more about senior issues. What happens if you're working? Should you put money in your pension? When do you got to take money out of your IRA? should you keep withholding once you're retired? What to do with your IRA after I deal with these people? Now, I'm going to tell you, if you hear somebody hang up, it's your cue to call in, right? 803-0930, star 930 on a cell phone. And if you can't get us on air, you can call the office at 632-7886, 632-7886. That's our corporate headquarters. Visit us online at egtax.com.
And all of our branch locations are open, too, so if you want to call them as well.
Bother them. We love to help you. We don't charge for tax advice.
No,
right?
we don't.
All right, let's go to Tony and Clarence. I know who this is. Hey, Tony.
Hey, Esther, how are you?
I'm marvelous.
You sound much better this week.
You know, I
set some prayers for you.
Thank you. I got the cold and it went away. Then I got a cold again, but it was a very lovely cold. It was a very short cold. So I'm back in business. What can I help you with, Tony?
I'll make it real quick because I know you have a ton of calls. On the television the other day, I saw one of these tax people from saying that on the 2012 business tax forms that are submitted, the business has to indicate how many employees it has and if it's paying for health insurance. Is that true?
It's on the W-2. Yeah.
So that is true. Then.
Yeah, it's really what's happening, Tony, is we're rolling into Obamacare. So 2012, it's just on the W-2, and actually I've seen many employers who haven't put it on because I don't think there's any teeth in that law. So most employers, though, have it listed as a non-taxable fringe on the W-2, and the federal government will start compiling statistics. 2013, we're rolling into Obamacare. 2014, it's there. Yep. So, yeah, it is true.
Well, one thing I'll tell you, though, that I've looked at the bill myself, there is no enforcement provisions in the bill at all.
That's right. That's exactly right.
Currently, there is not. But one of two theories that's kind of floating around is either they're going to give them enforcement down the road because they can always amend the bill, or we're thinking that, if nobody's paying for it, what do they normally do when they're short money?
Raise taxes.
That's right.
So it is interesting, and really, I don't think anybody really knows until this thing is fully rolled out. I will tell you, we're giving all of our clients like a 2-page handout, which talks all about what the tax law just changed, what the Obamacare penalties are going to be starting in 2014, the New York State Health Insurance Exchange, about how you in 2014, if you paid it and you're under 300% of the poverty level, you can get a refundable credit, and those are things we're trying to get people up to speed on. Okay, Tony?
One last point, if I could.
Yeah.
Schulman was the person I'm thinking of. He's the head of the IRS. Schulman.
Okay.
And he said that that people are putting out in the per internet that they're going to hire 15 or 16,000
agents because the IRS, Tony, the IRS is the administrative arm, really the collection arm of Obamacare. So in 2014, you come in, you tell us who your insurance company is, what your insurance number is, and how many months you had it, because our job would be then to collect the taxes. So thanks for calling, Tony. Love to hear from you.
And what people don't realize is the penalties that you could pay down the road doesn't necessarily mean that you have the health care either.
Doesn't mean that you got the health care. And that's part of what EG Tax wants to help you with. So, again, we're very happy to help you. I got Sal and Joyce and Angie and Dave and other calls coming in. 803-0930, 803-0930. This is Esther Gulyas, the tax lady from EG Tax. We'll talk to you guys after the break. We'll take a short break. We'll be right back.
Times are certainly changing, especially when it comes to your taxes. But when EG Tax prepares your return, our staff will help you prepare for the future of the tax changes for no additional charge. From expiring tax breaks to the future of Obamacare, our EG Tax experts will help you prepare for whatever comes your way for absolutely no charge. Pair that with our already low fees, and it's just another benefit of becoming an EG Tax family member.
Call 56611EG for EG Tax.
In the nation, they go by Guardian, Lifesaver, and Friend. At Nationwide Insurance, we just call them agents. We put members first, because we don't have shareholders. Join the nation that cares.
Nationwide is on your side.
I have an insurance agent who cares. That's why Bill Barber has been my agent for 15 years. For any insurance needs, call Bill. 688-2199.
Nationwide Mutual Insurance Company and Affiliates, Columbus, Ohio. Subject to underwriting guidelines, review, and approval.
Hi, this is Esther. Basil Resale Transit and EG Tax have teamed up to help you with your taxes and make car buying fun. Basil Resale has a great financing program that virtually assures everyone gets approved, and some customers may have payments as low as $99 a month with zero down out of pocket. Just go to Basil Resale Transit, 6868 Transit Road, just across from Regal Cinemas in Williamsville. Call 632-2440 or go to basilcars.com. Click on Basil Resale Transit.
Just what I'm looking for. Basil, just great deals.
That's the best sexy music you can come up with, Joe. I mean, you know I'm a sex symbol in Western New York, right?
Well, this is just the start of it. I don't want to do it all at the beginning.
Oh, well, this is Esther Gulyas.
Are we gonna have a theme show now?
No. This is Esther Gulyas, the tax lady.
Live
we want to
taking your
help
calls.
you. I'm from EG Tax. This is our hour to talk taxes, and we're going to go to Sal and Tonawanda. By the way, we got offices now in Rochester, Batavia, all over Western New York, Arizona, Naples, Florida. You know, go down to Naples, get your taxes done. That's what I think. Anyway, we're going to go to Sal and Tonawanda. Hey, Sal, thanks for waiting.
Yes, thank you for taking my call. My question is a self-employment tax. I'm a news carrier.
Yep.
When you go to the warehouse to pick up the papers, they provide you with a section where you can insert your papers.
Sure. Yep.
Through the weekend ad. Well, they don't have enough sections to accommodate everybody's, so I have to take my papers home from the warehouse and use the house to insert the papers, and on the weekend to put all the Sunday papers together again. Could I use home credit?
Okay, an office and home is defined as you got 4 walls and a door, and you're using it exclusively for that particular purpose. So at the end of the day, is that room only right now being used for that reason?
Paper insertion.
Papers?
The one room, yes.
Okay. Then great. Yes, you can. You could deduct a combination of a portion of your mortgage interest, property taxes, utility bills, even repairs to the whole house or repairs to that specific area if you needed to. Those could be a direct expense.
Yeah, like shelves you put up, maybe some bins that you put up to keep everything organized. That would be a direct expense. But I will tell you, the IRS just changed the law on office and home. Not only have they loosen the restrictions for office and home, they kind of now have like an optional thing where they'll allow you up to, I think, I think it's 400 square feet.
Yep.
It's a $1,500 flat rate. So yes, if you're using it regularly, exclusively, up to 400 square feet, you can take up to $1,500. Okay?
Okay, and the form is 8829.
8829.
Okay, and I have one more question.
Yeah.
If you would, please.
Sure.
Social Security taxes went up in your paycheck 2%.
Right.
Yep.
Is the self-employment tax right now is 13.3?
15.3.
Is that going to go up 2% next year?
It's 15.3.
Yep. This year it's 15.3.
It's 15.3.
For
self-employed people.
You got it.
Okay. Thank you very much.
All right,
for your
Sal.
help.
By the way, Sal, if you have a net profit, let's say from your self-employment, you got another job and you got a pension, and let's say you got $5,000 left over, and you're not over the maximums for your IRA, you can put that whole $5,000 into an IRA.
Yep.
And if you have a wife, you could, a combination of both $5,000. So you'd actually pay no taxes except for the FICA. Absolutely. And you can do that up till April the 15th.
That's right.
Hi, I'm Esther Gulyas, the tax lady. So if you have any questions, all of our EG tax offices are open 9 to 9 Monday through Friday, 9 to 5 on Saturday. You can visit us on our website. Stevie does a great job with our website. It's got all kinds of information that you can use. And You know, in the meantime, if you need special help and you want to talk to us directly, we're at our corporate headquarters at 632-7886. Love to help you anytime. All right?
Absolutely.
And we're going to go back to the phones and talk to Joyce on a cell phone. Hey, Joyce.
Hi. Thank you very much for taking my call.
Sure, what you need?
My question is I took in a low-income friend last year, and she's on public assistance, so every so many months I have to write her a letter stating I'm charging her $300 a month that I'm getting from her for help her qualify. She only makes like between $80 and $100 a week. She's not handicapped, but yet she's not classified as handicapped, but she is ever so slightly Down syndrome.
Okay.
But I don't want to have any future problems with the taxes or anything. And originally she wasn't going to stay with me, so I didn't claim the money last year, but she's now staying with me for some time, and I don't want problems down the road.
Well, Joyce, you're certifying to the county that you're getting rent money from her, right?
Right.
Rent money is taxable.
Right.
So you have to do a Schedule E, claim the rent money. I'm sure that $300 for sharing a room is fair market value unless you're living at a mansion. And so you claim the $3,600 as income. You reduce it by any expenses. Probably she's got a percentage of the house that she's living in, and you'd have to reduce it by all the expenses that you incur running the household. Probably in most situations you're going to break out even, and it's not going to cost you anything. But you need to report it. You've certified that you got it.
Right. Now, because, I mean, she actually has use of the whole house, but she has her own room. But I don't have any documentation, like she doesn't pay electricity, heating, or water.
I understand, but you're giving her a flat rate. It's like boarding.
Yep.
So it would be a percentage of the use of the house. And so maybe she uses the house 50% of the time. So it'd be 50% of the utilities, 50% of and then her room, her 50% of the homeowner's insurance. And again, but with $3,600 being her allocation, might be the percentage of the time that she uses everything. But quite frankly, if you're going to put it on the Schedule E, you're going to reduce it by your expenses, and it probably won't cost you anything.
Okay. And then is there anything, like I said, she's extremely poor, and I actually really don't pocket any of the money. Like when she
All right, so you're wondering if you can claim her.
Well, not claim her because she's in her 40s.
No, but you see, Joyce, if she had less than $3,800 in income, but she doesn't, she has $4,000 in income, you may be able to claim her as a dependent if you furnished over 50% of her total support. But she's got taxable wages of about $4,000 plus the welfare, so you can't claim her, and there's nothing you can do.
Okay.
Okay.
All right, well, thank you so very much.
You're very
for your
welcome.
help. And that was Schedule E, right?
Schedule E.
Thank you so very much.
Thank you, dear. Bye-bye.
And even at the end of the day, even if it was just the public assistance, she's certifying to the county that this person is essentially supporting
That's
herself.
Exactly right. So there's nothing she can do. Now, if she wanted to say, just come on, live at my house, and we'll get nothing from welfare, and you just don't make any money, she would be her dependent.
Right.
You know, people that live in your home for the full year who don't furnish over 50% of their own support, have income of less than $3,800, who don't file a joint return and are citizens and residents of the United States, they are your dependents.
And so many people.
They don't have to be relatives.
But once you go down that road of certifying something to the county or otherwise, you're basically signing off, and that's it.
That's right. This is Auntie Esther from EG Tax. Give us a call, 8030930, 8030930, star 930 on a cell phone, and Angie's been waiting for a long time. Hey, Angie, how can we help you?
Hi, how are you? Thank you so much for taking my call.
What can I help you with?
Well, I have a question. I'm a first-time homeowner as of 2012.
Sure.
And I just want to see, is there anything different I need to do in regards to my taxes? Anything I need to show for or anything like that? Just
Sure.
Because I'm not really quite sure.
Well, okay. First of all, you just bought the house.
Right.
When you closed, they gave you a HUD-1 form. On the HUD-1 form, which is a Housing and Urban Development form, the long piece of paper, you prepaid the tax. You reimbursed the seller for the taxes that they paid. You had some interim interest. You might have had some points paid. That's all deductible. The bank, if you have a mortgage, you got a mortgage, Angie?
Yes.
Okay, so the bank's going to send you a 1098 statement with the taxes they paid out of your escrow, the interest that you paid them, and that's all going to be a potential itemized deduction on Schedule A.
Okay. So
Okay.
I should have my HUD-1 form and 1098 that the bank sends me?
That's right.
And at the end of the day, sometimes you got to watch out for the 1098s because, like Esther was saying, the interim points and all that stuff.
That's only on the HUD-1.
It may only be on the HUD-1, so you got to watch out for that.
Okay.
Okay, and the other thing is, did you do new doors, windows, furnace, hot water tank, insulation, anything that would be a very
Energy
high
Star.
efficiency energy conservation? Because you could get the energy credit up to $500.
Oh, okay. No, we didn't.
Well, then
Okay.
that's still option. That's open to
you.
you that's open to you for next year, though, Angie.
Oh, okay.
Okay.
All right. Thank you so much.
Thank you,
I
dear.
appreciate
Thanks
it.
for calling. Bye-bye. Let's see. We'll go to Dave in Rochester. Hey, Dave.
Good afternoon, young lady.
Thank you, sir. Darn right I'm a young lady.
Yeah.
Until they bury me, you know?
Right. I have two short questions.
Yeah.
In 2011, that was the first time since going on Social Security that I had my taxes done.
Okay.
Should have been claiming Social Security, but
Okay.
never having been on it in my life, I did not know
Sure.
that had to be claimed.
Sure.
And a group that does taxes for free for seniors did mine, and it was goofed up.
Okay.
4 or 5 months later, I received a letter from the IRS
Right.
that I owed money.
Right.
So I took care of it immediately.
Okay.
And it wasn't a lot of money, but it just irked me. I can't blame the people because they did my taxes with the information they had. I didn't take it.
Right.
So am I now going to be flagged all my work?
No, Dave, don't worry about it. They basically got a computer run. Everything that is given to the IRS, they run on the left-hand side, boom, 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 boom. On the right-hand side, they look at your information, boom, 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 and they go, Dave made a mistake. And they do that every year, and if you do it right this year, by the way, we're in Greece, then you won't have any problem. So don't worry. They will not flag you.
All right, I took care of it immediately. The second question is it law, is it a federal law that one, I came out of retirement a few years ago, and I work a few hours a month for a little place, and should I be receiving my W-2s from them by the end of...
Yes, sir.
By the end
Yes,
of
sir.
January.
I got to tell you, everybody's like really late this year because they know the IRS isn't open for business till the 30th, but give them a call. They got to get you your W-2. Okay, Dave?
Thanks, Dave.
Thank you, sir. I'm Esther Gulyas, the tax lady. We're going to join you on the other side of the news. Hang on, 8030930, star 930 on a cell phone. We'll talk to you later.
Listen to WBEN anytime, anywhere. Online at WBEN.com, with our app on your phone, and now on TuneIn.com. News Radio 930 AM and 107.7 FM WBEN.
At EG Tax, we know you're on a budget. That's why we're bringing back our free simple federal return program. All you pay is just a small fee for your state, and your federal return is free and guaranteed. It's just another reason to come join our family this year. Taxpayers required to file both federal and state returns to apply. Promotion ends February 28, 2013, and applies to Form 1040EZ only. Additional fees apply if customer receives EIC, requires additional schedules, or applies for a bank product. See egtax.com for complete details.
This is Attorney Dennis Kitchen. You know, even responsible people occasionally face serious financial difficulty. Bankruptcy laws were made to protect people in financial crisis and keep creditors from taking their income and property. I have met many people overwhelmed by debts, and together we have been able to find a solution. I'm Dennis Kitchen, and I'd like to help.
For the full story on debt, bankruptcy, and its alternatives, go to kitchenlaw.com or call attorney Dennis Kitchen at 631-5661. There is no charge for an initial consultation.
tell you how it will be. There's one for you, 19 for
I like that.
You gonna
That's
start?
good.
You gonna start singing again?
Because I'm the tax lady, right? I made that song a long time ago. This is Esther Gulyas, the tax lady from EG Tax. And if you have any questions, you want to talk about your tax situation, you're wondering about W-2s and 1099s and when are they coming out and things of that nature, give us a call, 8030930, 8030930. And I know poor Beth has been waiting for 16 minutes. Hey, Beth, this is Esther Gulyas. How can we help you?
Hello, Auntie Esther.
How are you, dear?
I'm very well. I heard Andrew Cuomo say that he was going to help balance the budget by changing the workers' comp laws.
Uh-huh.
Does that have anything to do with now taxing workers' compensation?
I mean, workers' comp is federally tax-free. So I don't know if he's going to change the way you can collect, but it's federal law that it's tax-free.
Yeah.
Okay, so he couldn't affect it through the state then?
I mean, I'm going to tell you, Beth, I've been in this business a long time. It seems like things that you don't think can happen can happen. Maybe the state of New York is going to say it's federally tax-free, but it's taxable on New York State. I don't know.
Yeah, because
he was
going to help balance the budget somehow through part of workers' compensation.
You just never know. I don't know. I mean, when it comes to what people do, passing laws, I do not have a crystal ball. I just only can regurgitate what they pass. I don't like a lot of it, but if I ruled the world, believe me, we'd all be doing things differently. But nobody wants me to rule the world.
Not yet.
Not yet. Well, they would shoot me anyway. So anyway,
well,
all right, Beth.
Thank you so much.
Thank you, dear. Bye bye. It is true. They would say you were running the world. Goodbye. Adios. All right, let's talk. I know we got a couple people still holding. 8030930 is our phone number here in studio. 8030930 star 930 on a cell phone. We were talking about seniors and things they should be careful of. Like if you're still working and you're a senior and you don't really need the money. You're just kind of going out. The wife says, get out of the house, Jack, or I'm going to kill you, and you get a job. So one of the things you can do is what, Stevie?
Put money into a 401k or an IRA or some kind of pension.
That's right. I mean, sometimes you're making $6,000, $8,000, $10,000 a year. You're both under the age of 70 and a half. You can put all that money away in a pension. So it saves you taxes. It saves you the income tax, saves the taxability of Social Security. I mean, it's just remarkable. So that's one thing we would suggest. How about once you're age 70 and a half?
Well, truth of the matter is, depending on what other sources of income you have, maybe you really don't have a tax liability. Maybe you stop withholding altogether on your W-4.
That's exactly right. Because if you don't have a tax liability, have them stop withholding. I have many clients that just come in just to get their refund back. And you say, why are you withholding?
I have a client for years. He's been on Social Security for years and withholds Social Security. Finally, this year, he always has been withholding. He comes in, he gets like a $2,000 refund every year because it's his money he's getting back. Finally, this year, he says, what do I need to do so I have to stop coming in at this point?
This year, I printed up all kinds of W-4s with my clients and just given it to them so that they can stop the withholding. The other thing is, once you're age 70 and a half, you have to start doing required minimum distributions on your pensions and your IRAs that you haven't started withdrawing on. The penalty if you don't do your RMD is
50% of what it would have been.
Right. So if you're required to take out 10, you took out nothing, and you don't have a really good excuse like you were dying in the hospital, then the penalty is half of what you should have taken out. $5,000. So
unbelievable.
And we're going to go back to the phones and talk to Tom in Orchard Park. Hey, Tom.
Hey, how are you?
Good.
Good. My question is, I'm a W-2 and I'm a sales rep, and I do a lot of driving with my personal car that I've been itemizing.
Yep.
This past year I got married, and my wife's car gets better gas mileage than my truck, so I've been driving her vehicle when I, go on my long road trips for work. Now, can I use those miles I drove on her vehicle?
Absolutely. All right. Well, we'll have Stevie answer.
Absolutely, you can. You could definitely claim the mileage, and then you'll be able to claim that and write that off. So you take the standard mileage rate at that point, and then obviously your tolls and all that stuff would also be deductible. Parking fees, and then if you're traveling away from home and you're staying overnight, your hotel fees,
tolls,
all that stuff.
Right. So all that stuff. Now,
even
Tom,
if we're
do you submit an expense report every month?
No, that's a good question.
Okay.
Could you have
so
gotten
that's
reimbursed for the mileage at all in that expense report?
Well, he does.
Yeah.
Oh,
right?
he does.
It
Okay.
does. So it's the excess that you would report on your 2106.
I have a finite number of dollars in my expense budget per year.
Okay, so you're going to get a great big 2106. The only fly in the ointment is, unfortunately, that would be subject to alternative minimum tax. Did you just get married?
Yeah, this past August.
Oh, congratulations.
Thank you.
Yes, you get to take your 55.5 cents a mile, and since you're filing a joint return, you can use Mommy's car or your car, whichever you want.
Okay, great.
Thanks,
so much.
Tom. Bye-bye. Let's see.
We don't know if he has kids yet, though, so you call her mommy.
Well, she will be a mommy, I'm assuming.
There you go.
Usually. Okay, and we got Phil in Pendleton. Hey, Phil.
Hi, how you doing?
Good.
Hey, I have an RV, and I was wondering if I could deduct the interest on that mortgage.
Absolutely, you can. It wouldn't be on your auto loan as long as it has, a bedroom and a bathroom and all that good stuff. Then yes, you could definitely write off the loan, the interest on the auto loan that you have on that RV.
Okay, I called the bank to give a year-end statement, but not a 1099.
Nope, they won't do that. But on the Schedule A, there's a space where you can write in the bank's name and address and their tax ID number if they provide it to you, and then how much interest you paid, and that would be deductible on your Schedule A.
Okay.
Thank you very much. Yep.
Thanks, Phil. Okay, and we're going to go to, let's see, Ron in Niagara Falls. Hi, Ron. Esther Gulyas. How can we help you?
How are you?
Good.
Hey, I have a race car.
Good.
Cool.
And we got all of our winning statements about a week ago. We grossed $5,200 of winnings.
Mm-hmm.
Now, I've got receipts totaling almost $11,000 invested, and I have more, but I haven't dug those up yet for like fuel and stuff like that. But I also have probably $6,000 in sponsorship money. Do I have to claim that sponsorship money, even though nobody has ever sent me any kind of 1099 or anything like that?
Ron. Okay. Now, just between me and you, do you think you got to claim that $6,000? Ron, no, come on, Ron. Do you think you got to claim that $6,000?
Yes.
You're right. Bingo! You win the prize. You're right. You got to claim it.
Okay.
All right.
So, but now.
See, I mean, in your heart, the whole thing is in people's hearts of hearts. Many times
they're hoping
they
for
know.
an out.
I know, but I mean, the
an
bottom
out.
line is, in order to take those expenses, Ron, you have to be trying to make money. Is this a hobby or is this really a business?
This is a hobby.
Oh, well, if it's a hobby, then you're limited in your expenses up to your income. So you got $5,200 in prize winnings, $6,000 in sponsorships. So you got $11,200 in gross income, and you can take expenses up to $11,200. You're not allowed the loss.
Okay, I'm not allowed a loss.
You're not allowed the loss, but you're going to feel so good that you did what you were supposed to do.
Okay.
And it sounds like you're going to break even or get very
Yeah,
close
right.
there.
And you're good. Right. And keep winning. At some point in time, when it turns into a business, then it's a horse of a different color.
Okay.
Thanks, Ron. Bye-bye. See, he knew.
Yep, and that's exactly what it is. And, that's kind of along that line of the professional gambler, too, where they think that they can write off above and beyond.
Right.
But at the same time, you really can't.
Right. People know.
Yeah.
And we're going to go quickly to Helen. Hey, Helen, this is Esther Gulyas from EG Tax. What can we help you with?
Hi. Well, on that same subject,
Aha.
I got a statement from the casino that had a win-loss
Yep.
ratio.
Oh, yeah.
Yep.
And also I wanted to know if I can use, like, scratch-off.
The whole thing is, let's say the casino says you won 22 and your losers were 18 and you had scratch-offs of another 3. The 18 and the 3 is 21, and you can take the 21 as an itemized deduction. Line 21 is going to be your winnings, and so, you can offset the one with the other.
Yep.
Great. Thanks very much.
You're welcome, Helen.
And the thing with if you're a habitual gambler and that's what you're doing and you're playing a lot of those scratch offs, do yourself a favor, keep a log.
Oh my God, you got to save them.
Yeah, you got to save them and keep a log of when you get them too, because at the end of the day they don't necessarily print a date on those.
The bottom line is, if you do get audited And I want to tell you, they are stepping up audits.
Oh,
I mean,
yeah.
there's just no doubt about it. They're hiring a lot of new IRS agents, and they're looking for money. And when they come to you, you have to prove what you put on your tax return. You know, part of what we do at EG Tax is we do a great return. But while we're doing your return, it's just like we're doing on the radio here. I say, hey, come on, this is not worth it. I talked to a guy the other day, and he says, well, I think I'm going to claim this year. And he gives me some figure, and I said, wait a minute, what do you mean you think you're going to claim? He says, well, that's what I'm going to show this year. And I said, no, you claim what you got.
What you did.
Do you really think for you to leave $10,000 off, you're in the 15% bracket? It's $1,500. You're going to cheat for $1,500 and potentially ruin your life, your family, get all these penalties and interest. It's not worth it, number one. It's unethical, number two. And it's too hard to keep track of cheating, you know?
And that's exactly the point. And at the end of the day, it's not worth potential jail time. It's not worth a $5,000 fine.
Right.
I mean,
you see some of these cool people on TV that are spending time up in the big house because they didn't report it all. It is absolutely not worth it. And when people say, how do they know? Look at this particular gentleman lives in a beautiful house.
Yep.
He has 2 beautiful cars.
Yep.
When I took a look at his tax return that somebody else did last year, I said, look at, how did you buy these things? Did the tooth fairy drop them off in the front yard? That's how they know. Because when you're spending money that you don't have, that's how they know. And when that happens, it's fraud, and you don't want any part of that. Believe me.
And they do take those things into consideration. Where are your assets? What kind of assets do you have? Because at the end of the day, it's all a balancing act. If you're making this money, you should have these kinds of assets.
Let me tell you something. And with the internet, I was on an audit this summer. They pulled up the guy's house online. They Googled it. This is your house. Well, here, the value is X amount of dollars. You know, we live in a very electronic society, and things are not as secret as you might think they
Not at
are.
all.
Okay. So anyway, I'm Esther Gulyas, the tax lady. We're going to break for a couple of minutes. Our phone number here in studio is 8030930, 8030930, star 930 on a cell phone. If you get a busy, call back. We'll join you on the other side. Thanks.
Times are certainly changing, especially when it comes to your taxes. But when EG Tax prepares your return, our staff will help you prepare for the future of the tax changes for no additional charge. From expiring tax breaks to the future of Obamacare, our EG Tax experts will help you prepare for whatever comes your way for absolutely no charge. Pair that with our already low fees, and it's just another benefit of becoming an EG Tax family member.
Call 56611EG for EG Tax.
In the nation, halfway won't cut it. That's why Nationwide Insurance offers brand new belongings. If something in your home is stolen or destroyed, we replace it with a brand new version.
Nationwide is on your side.
This is Esther, and life comes at you fast. That's why I'm grateful I have my trusted insurance agent, Bill Barber, on my side. For help with your insurance, call Bill, 688-2199.
Optional feature. Exclusions and limits apply. Damaged items may be repaired. Consult policy language for specifics. Nationwide Mutual Insurance Company and Affiliates, Columbus, Ohio.
Hi, this is Esther. Basil Resale Transit and EG Tax have teamed up to help you with your taxes and make car buying fun. Basil Resale has a great financing program that virtually assures everyone gets approved, and some customers may have payments as low as $99 a month with zero down out of pocket. Just go to Basil Resale Transit, 6868 Transit Road, just across from Regal Cinemas in Williamsville. Call 632-2440 or go to basilcars.com. Click on Basil Resale Transit.
Just what I'm looking for. Basil, just great deals. Get up and put your money where your mouth is.
That's a good one, Joe. Put your money where your mouth is, right? Anyway, this is Esther Gulyas, the tax lady from EG Tax. All of our offices are open all over Western New York and Batavia and Rochester, out in Springville, out in Warsaw. in Naples, Florida, out in Arizona. We should be in Naples, Florida right now, or Arizona, right?
You know, I would
You
volunteer.
cannot go. You
to-
cannot go.
No.
You cannot go. You got to stay here. But during the week, look at if you're getting your stuff and you don't know what to do, and you need somebody to talk to, you can call any of our offices and talk to a real person. And we really want to help. And I will tell you, we really do. And we don't make you send in a pint of blood because you ask for help. We want to help. So again, I'm Esther Gulyas from EG Tax, and we're going to go to John and Tonawanda, who's waited such a long time. Hey, John.
Hi.
How can we help you?
Well, I took out an IRA many years ago. Now I got to take out a minimum.
Mm-hmm.
How old are you, John?
71.
Did you so you turned 70 and a half last year?
Yeah.
Did you take out your required minimum distribution last year?
I just took it out, yeah.
No, last year in 2012, when you were 70 and a half, did you take it out?
Well, I took it out, yeah.
Okay, you did last year, right?
In 2012.
In 2012, you took it out.
Yeah. Last year, yeah.
Okay, good.
Yeah,
all right,
okay.
so that's good. And so you're going to do that, and you were a good boy.
Yeah, now, do I got to pay tax on this?
Yes, sir.
Even though I pay tax on it?
All right, was it a Roth?
No.
Okay.
Was it a non-deductible IRA?
Yes.
It was a non-deductible IRA. Have you been keeping track of your basis every year?
How do you do that?
Okay, if it's a non-deductible IRA contribution, you have to fill out what's called an 8606 with each one that you made throughout the years. That way you could track how much you put in non-deductible contributions every year. And then when you go to take it out down the road, guess what? You're not going to pay tax on any of that money that you put in on a non-deductible basis.
Right. So if you had commingled it with deductible and non-deductible IRAs, a percentage of it will be tax-free. So if you want to come into our office, we'll work up the percentage for you.
So I got to go back 25 years to figure out all this?
Yes, sir. Unless you want to make it taxable. If you don't do the due diligence, if you don't come up with the basis, they're going to tax you on everything.
How much did you have to take out last year, if you don't mind me asking?
About $1,300 something.
Oh, $1,300. Do you have any other income outside of that?
Yes.
Okay.
So you really want to get the 8606 straightened out,
Yep.
because you got all these years going forward. So if you know what you put in and what you commingled it with, we're very happy to help you.
But I didn't commingle ever.
All right, so you put in one non-deductible contribution.
Well, over a series of years, a number of years.
So every year you never took a deduction on your IRA contributions?
You mean as a non-deductible?
No. Did you ever write off your contributions that you made to an IRA?
On your tax return?
No.
Never.
Never.
On that fund?
Yes. On that
All right,
fund.
then it's going to be tax-free. So he has to do a 8606 showing that it was a non-deductible contribution, so the IRS will know why you're not taxing it. Otherwise, they're going to send you a bill.
What is the basis? Does the basis have something to do with it?
Well, yeah, that's what your non-deductible basis is, what you're basing
Right.
that off of, so that you don't pay the tax on
Right,
that
but
money.
then you got appreciation. That is going to be taxable.
Right.
So you got a basis that you put in and the appreciation, and a percentage of it's going to be tax deductible, because that would be your basis compared to the total, which includes the appreciation. John, you need help.
So the amount of so if I invested it in a mutual fund.
Let's do simple math. Let's say it's worth $100,000 now. Let's say your non-deductible basis is $80,000. You have $20,000 in appreciation. That means 80% of what you take out is going to be tax-free. So if you took out $1,000, $800 is going to be tax-free. $200 is going to be taxable. But you do that on the Form 8606.
Oh, I see. Yeah.
Okay?
Yep.
Okay. Thank you.
Thanks, John. Bye-bye.
And
I'm so good I can do math in my head.
But I can tell you right now, though, if he claims that where it's dollar for dollar, where he takes it all off, they're probably going to look at his return, and then
Believe me,
they're
going to send him a bill.
Yeah,
they're going to send him a bill.
they're going to want the proof.
Okay, Mike on a cell. Hey, Mike, how can we help you? Mike.
Hello, Mike.
Hello, Mike. Mike.
Michael.
Okay, we're going to go to Bob in West Seneca. Hi, Bob. How can I help you?
Hi, Miss Gulyas. Good afternoon.
Hi.
My question is,
It's for my brother. My brother has a severe learning disability, so I take him to your office up in Niagara Falls, or in Tonawanda, Amherst, and have his taxes done. Well, he's been estranged from his wife for a period of time, and because of circumstances, he was ordered to stay away from the home, which he owned, which is not a problem. We've abided by what the rules are. However, he was entitled to get an injured spouse, an injured spouse, I don't know how you call it, but
in other words, she owes money to the IRS. Is he filing a joint return?
Yes, he always files a joint return.
And she signs it with him?
What happened was, in court, she had to sign the paper in front of the two judges that he wanted to, go and get which she was entitled to have.
Right.
To go get his injured spouse money.
Right.
And she signed it in court. The check was sent to his home of record, which they both, were on record. But he hasn't been to the house since.
And so she's got the money.
Yes. The check was cashed.
All right.
So okay.
So she
at the end of the
forged
day,
his signature, right, Bob?
Well, we can't prove it, but
okay.
that's what we believe.
So here's what you can do. First of all, unfortunately, the IRS, they're really, the only thing they can do is get you a copy of the canceled check, but then you would have a legal battle on your hand, and he would have to take her back to court at that point to get the
and
money.
maybe small claims court would be a good place to take her.
Yeah.
Right.
You know, but if you have a copy of the canceled check, which shows that it wasn't his signature, you'd probably be in good shape. And the other thing is, she would need her hand slapped because that's not good. What I'd suggest you do this year, Bob, is when he files his tax return, have it directly deposited into his checking account. Then it doesn't go to any place, but to him.
Yeah.
Right.
Yeah, we're going to do that for sure.
All right.
Through your advice from the other office. Thanks for your time.
Thanks, Bob.
Have a great-
And that happens many times in divorce situations. And the cool thing is, really quick, is that let's say you're in a divorce situation and you want to split the refund, you can even do that now too with direct deposit.
That's right. A lot of times you'll have couples that come in and they really don't like each other anymore, but they're filing a joint return because it's the best thing for them to do. And she says, I think that he's going to get the money. And he says, I think she's going to get the money. You can split the refund and put it in two different bank accounts. Then they don't even have to see each other anymore. Because it's hard when you're getting a divorce.
That's right.
Okay, we're going to go back to the phones to talk to John. Hey, John.
Hey, Esther. Got a quick question. I bought a house, double, on the Obama plan, that first-time home buyer, where you could get up to $8,000.
Oh, okay, but you're living in it, right, John?
I am living in it.
Okay.
But I was told I can't claim any of the repairs for a period of 3 years. Is that correct?
Well, okay, did you get the whole 8,000, John, or did you get it split,
No, I got the whole 8,000.
Okay, yeah, that is a big deal because you have to be living in the whole house at that point. You can't be renting it out. Half of it, if you got that home buyer credit, that's for a primary residence. Otherwise, you'll have to pay back half.
When you did your application for the house credit, you basically said to the IRS, this entire structure is my house. The rental portion did not qualify for the credit.
Okay, so they told me correctly, because I have not claimed any of the rent or anything.
Well, that's great.
So, okay. But is it a 3-year period?
Wait a minute.
You didn't claim any of the rent? Are you getting rent?
No.
Okay.
I've got a nephew in there.
Oh, so you just have like a family member that's boarding with you.
That's correct.
Okay.
Okay.
All right. Okay. So, yeah. So, our hearts start beating here when the wrong answers are said, So, but anyway, so it's correct. I mean, if at any point in time you turn the house into rental, then you'll be able to take the expenses and a percentage of the expenses that you incur for the house once it turns into an income property.
And then from there, though, you got to wait the 3 years, though, like they said, though, because otherwise you'll have to pay back half of that home buyer
That's
credit.
Right. Okay.
Okay, that's what I was getting at. So as long as the people telling me aren't nuts,
they're not nuts.
No, they're not nuts.
So that actually should be coming up then, probably at the end of. I would think for next year I can probably do it, not this past year's tax, because it would have been.
When is the 3 years up?
I purchased it in. Let's see, this is 12, 11, 10, in 2010. I'm guessing.
Okay, so in 13 it's up.
Yeah.
Right?
Yes.
And then you can convert it to rental, part of it to rental.
There you go.
Okay, John.
Thanks for your help.
Thank you, sir. Bye-bye. And then we got Phil in North Tonawanda. Hey, Phil.
Hello, Esther. How are you today?
Good.
I spoke to you a couple years ago. I went through a divorce, and I was left with some debt, and I had some monies in my 401k. I took a loan on half the money in my 401k, which was $16,000.
Uh-huh.
And I'm paying myself back, and you told me I was doing the right thing at the time.
Right.
I'm paying it back plus 4% interest, which is about $68 and some change per week.
Okay.
Can I claim deduct the 4% interest
No.
on
No.
my taxes for that
Nope.
loan?
No.
And believe it or
because it's all going back into a pension plan.
it's going back to you.
Okay.
Yeah.
Just curious
But-
as to whether I could or
No,
not.
no.
And my second question is a quick one.
Yeah.
Last year, you advertised free federal returns, and then
on the 1040 Easy
for the
right.
state return.
Right. Mm-hmm.
Is that program this year also?
Yes, sir.
Till the end of February.
Right.
Till the end of February. Yeah, I missed it by about a week last
Well, then
year.
get
I kicked myself.
Get in there.
Get your tootsies in.
Yeah, I go to the Webster Street branch in NC, or it's either Goundry or Webster.
Goundry, yeah.
In the corner there.
Thank
And,
you, Phil.
Laura does my taxes. She does a wonderful job.
She is great.
Been going there for years.
She is great.
And I just wanted to know if that program was
It is still in
this year.
Absolutely.
Okay, great.
Thanks,
Till the
Phil.
end of February, yeah?
That's right.
All right, Esther,
Thanks,
thank
Phil.
you very much.
Bye-bye. Okay, and quickly for you seniors, state of New York, the first $20,000 you receive in pension, if you're over the age of 59 and a half, the first $20,000 you receive is tax-free. If you're retired on a state, federal, or municipal pension, the whole thing is tax-free. So if you've been counting it as income on the state return, you've been doing it wrong. Private pay nursing home credit. If you have someone in a nursing home or you know someone in a nursing home and they're in a private pay situation, they're paying a 6% bed tax. That's a refundable credit. If you don't apply for it, the state of New York will take your 6%. Now, just to tell you how much it is, let's say it's $6,000 a month they're paying for nursing homes. That's $360 a month, so that's like $4,000 a year that you would have in a refundable credit. That's a Form IT-258. The other thing is long-term care insurance. That's deductible as an itemized deduction, and it's also a credit on New York State. And don't forget, if you're somebody that has gross income under $18,000, you may qualify for a renter's credit. And I said that all. And in the meantime, I'm Esther Gulyas, the tax lady from EG Tax. If you need us, we're at 632-7886. We're at egtax.com. Use us. I think you'll love us. Till next Saturday, I'm Esther Gulyas with Steve Jacobson. Bye-bye.